Before we get into it, as a reminder, none of this is financial advice, strictly for entertainment purposes only. Shout out to the sponsors of the stream, Bybit. So as a reminder, Bybit is now strictly KYC. So if you can't qualify for the stipulations regarding KYC, regional and geographic, you're asked out. You can't trade on Bybit. Just shout out to them. They still have some incentives going on right now with regard to bonuses and whatnot. So those links are below. I'll go over a BTC setup that is still on the table. The last time I streamed actually was all the way back here. It was actually on the, that was the 2nd of October, because that was after we had this big markup, short squeeze, long squeeze. This day hadn't even transpired yet. And my guess was that we were going to have another inside value day, be within balance, and we would retest this POC. And I mentioned that as being a good short opportunity. It came once, it came twice. So here we are. But there is actually what I think is a somewhat decent long opportunity. You know, whether or not it's even worth taking in this environment, I don't know. That's up to you. We'll get into the market though, because there's possibly some more volatility on the way, depending on how this continues to transpire. I mean, anytime there's a war, markets hate uncertainty. So, I mean, it's pretty certain right now that there's a war. You know, whether or not any kind of peace talks come up, these things like these, it's unfortunate that we're like talking about this in a way that, hey, how can this be advantageous to our trading and us making money? I personally don't feel really good talking about it right now, so I won't get too much into it. But I would just say that there's a lot of things that are potentially on the table to create a lot of action in markets. And outside of everything that's taking place geopolitically, tomorrow is a pretty significant day. We have core PPI. We have the FOMC meeting minutes. Those are at 2 p.m. This Thursday, we have CPI, right? It's 2 back-to-back days, Wednesday and Thursday, with economic releases that should lead to some short-term volatility. For me, that's something that I'm looking forward to. I had a really good day today trading the NQ. I was down briefly and then just was able to hammer it on the way back down. So we'll take a look at the NQ, because I think there's something worth pointing out. And these, listen, the things that I go over, these are going to be relevant to crypto as well. But I guess just some concepts, just some things to think of. So in particular, looking at the NQ. So if we look at high time frame wise, so I've been talking about the 4,200 level for a really long time now. So I mentioned this morning that I don't think that we've seen the extent of the retest. I would expect that we would get more of a probe, retesting a little bit lower down here, cleanly around 4,200. So do I think that that's it and that stocks are just going to continue to march up from here? I don't get that impression. I mean, the move last week in oil was pretty wonky. Moves last week in rates were equally wonky. So I don't think we're just going to get sort of a one and done test of this level. Going back a couple weeks, I'd said, I think the market's about to build its next base. Idea is pulling back and having a period of weeks, if not at least a months maybe, of the market basing out, building, you know, a new area of two-way trade, and then cleanly leaving that to continue upwards. So this is like the first major test of that level. And so I don't think this is it. I think that we're due for a little bit more of chicanery back down around 42. Like I said in the last stream, I think this doesn't necessarily just mean 42. Like, I don't want to talk about it like things are that clean. It's 42, 41, you know, all of that is more or less within play. I don't think it's that necessary to go over high time frame equities or equity indices, because obviously the market is not as correlated. Yeah, the markets are decorrelated with crypto, but if we do have anything that's a major spillover and causes a ton of volatility in legacy, you know, if we see 42 go, 41 go, and there's really no turning back and there's no significant sign of strength there, when you have like multi-sigma moves in equities and really strong moves, then we start to see just risk respond, right? If things start moving very quickly though in stocks, I think that correlation would come back. They're not right now. So, you know, other than volatility being up, it's not really that ugly. We had a significant bounce off the lows. I think 42, 41 is probably going to be well defended, honestly. Something that is worth pointing out. So just the last couple of days, if you look at the last 3 days in the NQ, the concepts and the way of looking at this would apply to BTC as well. So if you look at the last 3 days, so Friday and then yesterday, you have thin structures, right? So we had a trending day on Friday, strong move off of the lows, out of a multi-day balance. Yesterday, volume built up at the low, strong move off of the lows. You have a double distribution. So if we open this up, it's a little bit clearer. So today and yesterday started relatively the same. When you have a buildup like this and things are really tight. So one thing that's worth pointing out right away is that the market usually puts in the low or the high within the first hour of the day. This is something that would be considered a microstructural detail. So the high or the low, more often than not, you're going to see them put in within the first hour of trading. So overnight though, the market in both cases stuck within a really tight range. If you see something like this leading into the open rather, it's not really in your best interest to go ahead and fade, especially when we're trading within a prior area. There's a low volume node holding that level. When you see that and then the market ends up breaking outside of that compressed region during RTH, so during regular trading hours, it's not in your best interest to fade that. You can imagine in a tight region, the same way with BTC, you're going to have a buildup in positioning of both sides. And when you have a strong move that's confirmed outside of that range, in this case, you had 2 attempts in both directions. When one side is finally chosen and the market accepts through that level, so in this case, the levels are clear. It's right around 1540 and the other one was like 14980. Acceptance through that level, you're just going to be targeting the next sticky point. You're looking at a market that probably put in at least a short-term bottom. There's not a whole lot of stickiness ahead of it. So the same thing happened this morning. Same thing, very tight overnight session. Just looking at like what you have ahead of you, there's not much that stood in the way. On the way back up, you have pretty low volume regions to trade within. So it's kind of the same concepts I go over when I'm talking about BTC reaccepting into low volume regions, trading from one sticky point to the next, trading in those thin areas and it not really making sense to stand in the way of that. This is a bit of a better picture talking about yesterday breaking out of that thin region, but also holding a prior support level and a prior composite. You're looking at multiple weeks of trading at the lows, retesting. This is the NQ. So the NQ didn't have the extent of the pullback that the S&P did. Multiple days, weeks of build up, breakouts out of that structure. So we're just talking about compression after a breakout of market structure, holding a support level, and then going in the direction of that breakout of that compression. So of that overnight level. On the way up, nothing really standing in the way. As far as the NQ goes, I was trading within these 2 regions. So we have 15,364, 15,279. So I ended up longing acceptance back within there and capturing a pretty nasty, meaty short on the way back down. But as far as it goes right now with the S&P, I think this is something worth pointing out. The same way that I expected 42 to get retested, I think you're probably going to have something like this. So we probably retest that 15,450 level. So we're kind of accepting back within a prior composite right now. Probably get a sweep of these highs, and then I think we end up back down here. We'll go over the BTC setup I was talking about. Just a couple thoughts. So there's a little bit more doom and gloom around ETH lately. Conversation is around how a lot of things that are part of ETH have either failed or are in the middle of failing. Everything in DeFi pretty much being a scam for the most part. Kind of just giving up on ETH for a bit. And ETH is in one of those places where I would more or less start to expect this. So against ETH BTC, it's not in an area where I think it's in the most advantageous to buy yet against BTC. I would start paying attention to ETH around this 0.05 level. And honestly, let's say that a BTC ETF is approved. I think that, the time a week out of that is probably a good time to start paying attention to ETH, right? When everyone is jumping into BTC, when everyone is focusing on BTC, look for strength in ETH and for this ratio to improve. I've said that the cycles look somewhat similar in terms of time symmetry. If you look at ETH, the next major level, probably around 14. Let's say the market's, ETH swipes these lows locally. We don't get an immediate response. I wouldn't expect it to find any kind of significant bid until around 14. Who knows where that is on the ETH BTC chart? But I mean, you have, for example, the ETH Foundation selling yesterday, not anything crazy significant, right? I mean, $3 million worth of ETH is kind of a drop in the bucket. But historically, a pretty decent hit rate. They sell, at least interim tops. The last major top was when they sold 30 million ETH. And people were saying, that's not a lot. It's not a big deal. And that ended up being the top for months. So you have to wonder why they would be selling anything. And if obviously, I think that level is so insignificant to worry about. It's just market structure on its own is doing a pretty good job of communicating the overall weakness. BTC outperforming ETH very clearly. As far as BTC goes, nothing really changed since my last stream from this setup, right? So I talked about how we had this major long liquidation. We traded back within that, didn't lead to continuation. So if we're starting to base out, you're just going to start retargeting that high. We've gone over that already. Honestly, BTC looks weak to me. I still think we have this structure holding. I think we're looking at a lower high developing. I don't think we've seen the extent of the pullback. I think during the last stream, I talked about how 25 and 24.5 are going to get retested again. That doesn't mean that's the extent of the pullback. I just think that's a very significant chance. There's high probability of occurring that we see 24.5, 25 retested. I don't think it's off the table for us to retest 22, 23, or any lower prices, honestly. The market is not showing signs of strength right now. And this kind of looks like distribution. It takes a long time, especially after we've had quarters of the market moving up. So year to date, BTC is up, what, 50%, 60%? This is a really good year so far. So anything coming back down to 22, 23, like that wouldn't be out of the question. So even at a 50% pullback, which is not uncommon, is actually very common for this market to put in 50% pullbacks, right, for major moves. So, I mean, 23.6, that really shouldn't scare anybody, big picture wise. I think you still want to buy BTC into the halving. I don't know what price we are at the end of 2024, but I'm really certain that we're going to be higher than we are now. Everyone just thinks of either lows or all-time highs, right? I mean, we've been carving out this lower range, but don't forget, like we could trade back above 33 and spend a lot of time equally above 33 into this prior range, still not make an all-time high for a long time, but still have a very significant appreciation in prices. I think it would get quite responsive and reflexive above 33. I think like you can't be bearish above 33 considering the amount of time we're spending under it now. So like, let's say, market's consolidating and then we're above 33. I think you have to target much higher prices at that point. You have to look at least 40K, but that wouldn't mean like that it's just a straight march to the all-time high. I guess the best way to put it is, if you don't own any BTC, like if we end up hitting 40K, you're going to be in a really tough spot. You're going to feel forced to buy because you're only going to think that at that point, this thing is on a one-way path upward. So anyway, high time frame hasn't really changed much. I think, again, we're going to be going lower. The low time frame setup that I was sharing, it still could be on the table. All right, so from a market structure standpoint, I got a little bit of a gap here on the Binance chart. I was talking about a confluence of levels. So there's a couple of different things. So one, the weekly range so far. Monday low right now is the weekly low. Okay, so we're talking about yesterday's lows. This is a pretty common setup, either a move through Monday's low or a move through Monday's high. If there is sort of a confluence of either market structure or other conditions, this setup is obviously strengthened. But a lot of times what you'll see is that we'll make the low, or in this case, the high, and the reacceptance back within that Monday range offers at least a decent short-term trading opportunity. So in this case, because of the way the market is set up right now, you have a bunch of lows right here. This is the daily chart. So this was a composite, so 3-day composite. That composite value area low that I was talking about, prior composite highs. So this is like a little bit of a market structure flip right here. You can see it more clearly on this daily chart. But the Monday range setup is strengthened by that. If you don't have a wick on Monday, whether Monday closes at the high or Monday closes at the low, obviously I'm sure you could assume how you might strengthen one side or the other being taken. It's very uncommon for a daily high to be at the close, right? Or a daily low to be at the close, and for there to be no shadow or no wick or no probe either beyond the open. So for example, if your daily was left like this, right? Let's say this was the open and the daily is left like this. So the high and the open are the same. So this is immediately going to stand out like a target. And the same thing would happen if we had a candle like this, where this is the open and the market just was like one-sided on the way up. A lot of times this level is going to be a target. We're going to look for that level to be returned to, cleaned up, and then some kind of mean reversion. So my point is, there's a host of confluence down here between the composite value area low, then you have daily structure, you have a prior composite value area high, you have the Monday setup potentially right here. And what that would look like is us from where we are right now. So you see we're building volume at this low. The way this is set up right now kind of looks like a puke is going to come. You have an inside day as well. So that's another thing. If today closes like this, we have an inside day, we have inside value. So inside of yesterday's value, if we get something that takes this low, trades back within value. So right here. So retrading back above, honestly. So let's say we continue down and take yesterday's low. You're probably going to see this POC, because the swipe of yesterday's low probably comes with a bunch of people bailing out or bailing into shorts. You'll see this POC migrate down. So honestly, that POC might end up being a decent trigger for the setup. So let's say that we take yesterday's low. As we're moving down, we're bringing more volume into the market. It's going to bring that POC down. If that POC shifts down, we take yesterday's low and then we're trading above that POC. You probably could just target the high of this composite, right? It's the high of this value, 27.7, 27.6. Your setup would look something like this. Swiping this level. After that, you probably bring that POC a little bit lower I mean, you could even use this low, right? So this little consolidation here. So if we have a puke, take that low, and then we're trading back, let's say above, it is 27.3. There's not a whole lot of structure on the way down. So you probably slingshot back up to this high. If you just consider that the market is in balance right now and you have an attempt outside of balance and then you re-accept within balance, maybe we continue to move sideways a little bit longer, and the more likely thing to do is to trade back up within value. Obviously, you want to strengthen this setup. You want to see that shorts get trapped down here. You want to see that there's some kind of absorption after the fact. So swiping the low, trade lower, but now as prices reclaimed and slightly higher, you're seeing that sellers are getting absorbed and, the bid is replenishing and all those signs of strength that you would look for. And on this chart now, I have the weekly value and just daily profiles. You have last week's or 2 weeks ago, that VWAP right around 26.6, 26.7, sticky point right here between 26.9 and 27.1. If these lows don't hold, I would anticipate that come down here to take these out. I'm saying I think it's going to go lower, but I'm just pointing out the areas where I think it might find some kind of stickiness in the time being. So if we end up breaking down, after maybe we end up doing that, taking yesterday's low, breaking up, chopping around, breaking down. If we end up retagging these lows and you get some kind of bounce, maybe you want to look to add to any kind of short position or at least manage a position. So S&P is already back above, or the ES is back above this major area market structure. You don't really have a whole lot in the way now until we get back up around like the extent of this gap. So if we look at the S&P, so right around 44 for the S&P, there's a decent amount of clear skies if buyers continue to show up. If you have some favorable releases in the next 2 days that lead to more covering and more aggression by buyers, it doesn't have to turn yet. Yeah, I would be worried about any more weakness in stocks, like large moves in terms of stocks down, because BTC has been weak for the moves up. It is decorrelated, but it's also much weaker. I mean, people mocked me for saying quarters ago that I'd be more focused on stocks for the next few months than crypto, but it's turned out to be the absolute correct thing to do. I think this is going to continue this way, and we have to look closer to the halving for better results, or after an ETF approval, which I still think gets sold, at least in the short term. It's good long term, but I don't anticipate the market to like move to new all-time highs off of that. I don't bias too much of my ES/NQ trading against the dollar unless the dollar is doing something really abnormally strong in either direction. I focus intraday on the NQ and I'm scalping most of the time. It might affect more of my swing positions, but I don't really focus on it too much. Like if the dollar, for example, is at an area of high time frame support or resistance, then I'll be more mindful of any kind of swing positions in either. And it wouldn't be in the NQ. It'd be like I'd be picking up positions in the QQQ or the SPY. So as far as monthly candles needing a wick, yeah, I almost always on all time frames, not all, but I'll say going down to the hourly time frames or 30-minute time frames, because that would be more like having a poor low or poor high. I almost always want to see a probe past the open. If it's on the weekly, if it's on the daily, if it's on the monthly, if it's on the yearly, it's something that I will mark off. Like let's say, for example, is good condition. Apply this to the weekly or monthly or above, but consider that the time that passes between is probably going to be much longer. If we're talking about like Monday opens, weekly opens, this is the current weekly open. So we're within, yesterday's range. If the weekly opens and it's one-sided, so had Monday opened with no wick and then continued down to where we are now, that's going to be a target for me. More often than not, that's going to be just an area I have marked off, right? So either it might be for a target in the direction of that. So for example, this particular setup. So imagine we didn't have any kind of move above the open. If we take Monday's low and then we're trading back within that range, then I'm going to be targeting that as an area to take profit. If we hadn't moved lower and we didn't have a wick at the high at the open and we're drifting up, that's probably where I'm going to be looking for some kind of stop run or potential short opportunity, anticipating that, yeah, that'll be cleaned up. So whether or not you'd consider that a target though, for a position you're going to be in to take profit or potentially an area to enter, that depends on the situation. So you have inside days for ETH, inside day for BTC, inside day for Solana, inside day for WorldCoin, inside day for Link. So these are all things worth noting, right? Just to reiterate that setup. So this setup is decent today because we have value overlap, but the optimal inside day setup is when you have, for example, let's imagine that this is yesterday's candle. Here's today, right? These are within balance, okay? Today is fully engulfed in yesterday's range. And what we look for is upon today closing out, we look at today's high and low as being a potential trigger point for a trade to the prior day's extreme. So in this case, forgetting all the earlier setups, if we're just going to talk about this as an inside day setup, let's say this closes out in 3 hours. We'll box this off. So yesterday's high and low. And now let's say that this closes out this way. Today's high and low. So here's an inside day setup, right? And this is a pretty useful setup for BTC. And I would say more liquid alts as well. So inside day means you're within balance. You're usually going to be taking the setup. The best setup is best when it's a setup that is within balance, sort of like this down here. So these 2 days are very much in balance. That's an inside day setup. This one ended up taking you to much further extremes, but it was the inside day setup is a break from balance. So go on my YouTube course and just look at break from balance setups. The same concept. So how you determine the targets is, going to be dependent on context and situation. But let's say today finishes out like this. Here's your high, here's your low. In this case, if we have a false break through today's low, so a failed breakout. So let's say we open, we open here. Tomorrow we trade back down through the low and then we're reaccepting back within today's range, then you're just going to be usually targeting that prior day's high. So targeting this high in that case. If let's say, for example, we don't even get that, we open up, open down here, we don't trade lower, instead we start trading higher. You could look for the failed attempt through this level, but a lot of times the setup is going to be accepting through that prior day's high and trading toward the high, the structure that it's within. So this high. So accepting through, yes, it's today because it hasn't closed out. But if we close this out and we trade through today's high, accepting through there, we're a lot of times going to target that prior day's extreme. So the setup would be, break above and acceptance through 27.74, short-term trading opportunity to 28, right? Nice round number. The downside setup on a breakout, wouldn't leave you with a really far target, right? You'd have open, trade through this low. And then if you're just going off a textbook setup, you're looking at that low being swiped. In this context, I think it'd be better to sort of look for that Monday swipe, right? And then possible reversion to trade back through. But I've gone over the inside day setup, I think, more often than I could count. I think another thing worth pointing out though, is that if we look at just like annualized basis over the last couple of days, look at Binance, it is up. So if we look at from, for example, the 8th to where we are now. So again, this is not something that's going to have a funding rate, but it is worth paying attention to because a lot of times we'll talk about this at lows being in either backwardation or being flat. This is still elevated, right? So it still shows that, again, today is the 10th. If we go back to the 8th, just giving you a clear idea of we're higher, right? So 8th, 10th, that is increased. And the reality is price is actually decreased. So, this is something that you would want to see come off, right? A lot more before getting in position for, much for longer term long positions, swings and what have you. You want to see that get more washed out. It never really came down as much as I would like it to. It's still quite elevated. And it's just an indication that you've had people get into position here, again, paying that premium, buying, quarterlies. And for that positioning, the market hasn't moved higher, right? The market is still moving lower. So it's an indication of potentially some more trap positioning in those futures products rather than just looking at perpetuals. I think that'll cover it though, guys. Go ahead and hit the subscribe button, hit the like button. I will try to get a morning stream out again, maybe the end of this week or weekend. And we'll try to just have a stream where I'm talking while just trading. I mean, I'm not actively trading crypto by any means. I mean, if you look at alts, they're like in the same spot we left them over a year ago. And I don't think this is going to change yet. There's no reason for it to. There's no new retail push. So yeah. Anyway, tomorrow and Thursday should be pretty important days for legacy, and maybe we'll have some nice volatility from that. All right, guys, until next time.